Hey everybody, Scott Carson here. I want to give a big thank you to Steve Love, Giovanni, and everybody over there at Prosperity through Real Estate in LA. Just really thankful for you guys to watch this. I want to thank you all that were on the original one with all the technical difficulties, the internet going out. So I'm in a solid spot with solid internet back home in Austin, Texas. Not in the tropics like my background shows here, but excited to be sharing this information with you today and encourage you all to take action. A couple of things that I'll be offering throughout today's presentation. So grab a pen and paper, take some notes. I'm going to encourage you guys, if you do have questions that I don't answer, feel free to email me or email Steve, and Steve will forward those questions to me. I'll be glad to answer them individually, or you can always schedule a quick phone call with yours truly by going to talkwithscottcarson.com. That's talkwithscottcarson.com. And I'm glad to spend 20, 30 minutes with you, answering any question you might have and go from there. But what do you say we get started and get into the meat and potatoes of today's topic, all about making money and note investing. Now, I call this presentation really the 3 F's of note investing. And what do I mean by 3 F's? We're going to talk about how to find, fund, and flip. That's my big 3 F's of note investing. And I'm excited to share this. It's been over, I guess, about a year and a half, 2 years since I spoke in LA. And so it is. But anyway, a little bit about me. I'm known across the country as the note guy. I've been a real estate investor since 2002. I bought my first non-performing note in 2007, but been focused primarily on non-performing notes since 2000. That's really all that I've done with the downturn back then, and basically just focused on that for the last 13 years. I've been called the Chuck Woolery. Some of you guys know who he is, with the love connection of the paper by Investors Business Daily and the Wall Street Journal. I purchased over $1 billion in debt on residential commercial properties over the last 13, 14 years. A lot in residential, a lot in commercial. It's actually got started buying commercial notes versus residential notes. I've been featured in Inc.com, Wall Street Journal, just about every major publication, every news thing out there, yada, yada, whoopie-doo. I am the host of the very popular podcast, The Note Closer Show, that surpassed 1 million downloads recently. So if you like listening to podcasts, that's a great resource. You can listen to any place that you listen to podcasts, or on YouTube as well. And I'm most proud of the fact that I've helped thousands of investors, just like you, both new or seasoned, get into the note investing game and buying distressed debt. I've also helped a lot of homeowners stay in their houses and worked ways to create true win-win scenarios to take, I guess you could say, turn problem properties into profitable solutions for both of us. So if you'd like a copy of my slides, they're already available for you. All you've got to do is text the word notes, that's NOTES, to the phone number 474747, and you'll be able to download my slides. And I'll also send you a copy of my 72-page book, How to Buy Real Estate for 40% Off or Greater, How to Tap into the World of Note Investing. Easy read. But anyway, those are a couple of bonuses for you. I do have a big bonus, though, for you guys that are watching this or attending it. I have a one-day class that I teach once a month, the third Saturday of each month. I couldn't do this coming weekend because I'm speaking at another event. But on June 19th, the third Saturday of June, you guys are invited to be my guests at my one-day class called Note Weekend. If you go to noteweekend.com, your name and email, you'll get a free pass. You don't have to go worry about registering all the way for it. With that, you'll be able to have access to Note Weekend. And we start basically at 9 a.m. to 1, 2 o'clock in the afternoon. That's Central Standard Time, so it might be a little early for you in LA. But it's basically the nuts and bolts. It is the Cliff Notes version of note investing. You get the replays. You don't have to wait till the June 19th to watch it. You can actually start watching it this weekend if you need to. Join us live class. You'll get the replays of that class as well if you can't make it. We usually have somewhere between 30 and 70 people each month taking that as a kind of their intro to class. We'll talk about a couple hours on finding, a couple hours on funding and marketing, and a couple hours on exit strategies and vendors and things like that. So, hey, be my guest. It's a $49 value with over $1,000 in bonuses. And so noteweekend.com, if you register that way, just going to the website, we'll send you a link to join us via Zoom live on that Saturday along with the replays. But anyway, getting on to the nuts and bolts. So why are you here? Why are you taking time on a Tuesday night or on an afternoon to watch this replay? It's because you are holding yourself to a higher standard. You're looking for things. Not everything is complete in your life. Maybe this webinar is the one thing that completes you. You complete me, Steve. You complete me. But anyway, we're all looking for something. We're looking for ways to improve our retirement, to get to retirement, to pay for our education, pay for our kids' education, to retire our parents, retire our spouse, to do more with our life, to live la vida loca, I guess you could say, or just to, hey, you want to upgrade where you're at. You're not in a position where you like, and you want to up your game, up your level, up your life. And a lot of people use that, use real estate investing to do that. A lot of also people use real estate to help people. And one of the great things that I like about what we do in notes and buying distressed notes or naughty notes, I guess I'd like to say, is that we try to help the borrower. I always try to create win-win scenarios. The borrower is willing to play ball with us. Hey, we'll keep them in the house. We'll try to create something that's it's profitable for us, but it's also profitable in a good way for the borrower. And I want to introduce you to a couple, a family that I'm proud to call friends. I've known them now for several years now, but I want you to meet Sheila and William, and they're out of Southern Illinois. And I've actually known them now for roughly about 6+ years. And what's funny is how I met them is they were borrowers on a property that I bought the note on. And when you're buying notes, we'll get more of the basics later on, but you're actually looking at the collateral files. Yes, you look at the value of the property, but you're really buying the note. You're buying the loan file, which is collateralized by the property. If you don't pay, you don't stay. And this was just one file and property. That's what I pulled up online photo. It was just one property out of a portfolio that I was looking at. But as I was looking at the collateral files, looking at all the notes, stuff like that, I saw that they've been trying to do a loan mod for almost 4 years. And a little background, they've lived in this house for over 20 years, raised their 3 kids. They weren't bad people at all. They're great people. The value went up. They took out a loan to pull some equity out, like many people have, to pay off some bills. And unfortunately, in a matter of about 6 to 12 months, William had a heart attack, got laid off from work. Sheila was having a hard time finding work for a little while, and they were upside down. They owed more on their property because of back payments, and the values of the property dropped a little bit. Who hasn't had that happen to them at some point, right? And they were struggling to get by. And for 4 years, they were trying to do a loan mod. They're like, we want to try, we can't pay the back payments, but we can start making payments existing. And their loan got sold 3 times prior to me. And on the 4th time, I'm looking at his portfolio from a bank, and I'm looking at all these collateral documents. And the file was quite thick because it had her filling out and sending in loan modification packages, hardship letters, bank statements, tax returns, more hardship letters. And my heart just goes out to folks that are facing that, because I've been in that book. Back in 2002, I was in trouble. We bought a couple properties here in Austin. I was upside down because I got laid off of work before I learned real estate the right way. So I empathize with borrowers across the country. We all know we've got plenty of those right now. But anyway, I bought this note at a big discount. I immediately reached out to Sheila and William, said, listen, your note's been sold to my company. You could hear the wind just go out of her sail. She's like, oh, not again. I'm like, no. I've seen all your hardship letters. I've seen your loan mod packages you've sent in, and I see that it's been sold every time. What do you say we get this thing figured out right now? In a matter of about 45 minutes of conversation, we negotiated a loan modification, really a trial payment plan for 12 months to a permanent loan mod, that if she started paying her on time, her existing payment, and paid a little bit extra, brought a little bit extra to the table to start this. I usually like to have my borrowers bring $5,000 to the table, especially if they've been paid in a couple of years. And she couldn't bring $5,000 to the table, but she could bring $2,500, and she could pay $200 extra a month on top of her existing payment. I was like, that works perfectly for me. I said, Sheila, if you and William will do that for a year, bring $2,500, send it in to my attorney, and then pay $200 on top of your existing mortgage payment, what I'll do at the end of 12 months will change your life. Right now, it'll take you 33+ years to pay off your mortgage. If you do as I've told you to do at the end of 12 months, what I'll do is rebalance your loan. We'll adjust the balance. Anything that you're over on, we'll just forget about. We'll recast the loan for true value, 100%, not 150, not 200, but 100% value. And then I'll also drop your interest rate down from a higher interest rate down to 0. And then every penny that you pay will go towards principal. And then you'll have your loan paid off in 6 years versus 33 years. But you've got to pay these 12 months on time first. And she's like, oh my God, yes, no problem. Well, her and William did. I mean, if she was gonna be like a day late, she was like calling. I was like, look, you don't have to call me. Call the servicing company. So we got it all set up. Boom, she paid through things, started paying 100% towards principal, paid off her loan just recently. Well, about, I think it was somewhere around 9 months after she was in the agreement, I got a nice letter from her and William. And William actually cried when they went to the attorney's office and signed the trial payment plan. Then when they got the loan mod a few months later, and I found out, there's 3 daughters. The oldest daughter was having a kid, and they named the kid Carson after me. Now, I love that. I don't have kids of my own except the 4-legged furry kind, not that I know of. But anyway, that's the kind of impact that you have in the note business. You can be really great for a lot of people. It's not just a cutthroat kind of business like in a lot of other areas are. It's really helping an impact. Not only do we help Sheila and women, we help their kids, we help their neighbors, because now the neighbors don't have a foreclosure in their neighborhood. We help the city because one defaulted loan now is a performing loan, and now they're paid off. They're true homeowners, and they can take that money and put it towards their retirement and do a lot more with it. And we made out like bandits as well. I basically got my full investment back roughly in the first year, and it's been nothing but profit for the last 6 years. And so that's the beauty of what we do as note investors. My goal is to rehab the borrowers. It's not so much about the property. Yeah, if she wouldn't pay, would I have foreclosed on her? Yes, I would have foreclosed, taken the property back, and then sold it off and make a nice chunk that way. But I make more money. Note investors make more money being in the note business, not the property business. This is why the banks aren't into rentals. They're not into foreclosures. They don't like vacant properties. Notes are the way that banks make money, and I encourage you to do that. But anyway, what we'll cover the rest of the evening here tonight or today, we'll talk about how we find these notes from banks. We'll talk about how we raise capital and how you can find funding wherever you're located. We'll also talk about how we flip these deals with and make money in 1 of 10 different exit strategies. Won't be very long. I don't want you to be here for 4 hours. I want you and I are roughly about 60 to 75 minutes. But we'll also talk about how we love to focus on rehabbing the bar. You saw a little bit of a brief thing on Sheila and Williams things. But my biggest goal is for you guys to build a game plan, a true blueprint for success without huge overhead costs. I know many people are shy away from real estate because there's all this huge marketing costs and direct mail and campaigns and yellow letters and postcards. We don't do that in the note business. It's all done in the 21st century. We will show you how to create win-win-win scenarios for you, the banks, and the borrowers. But anyway, I always love to ask what your business look like. And as I go out and I'm speaking to REIA clubs across the country, whether it's in person or via Zoom like this, it's always amazed me when I see people going out looking for ugly houses, right? This one's got a lien on it, all right? $5,000, wholesale, $5,000, pink carpet will be fixed up and look great. Well, we all know that's not the case. And yes, people are looking for ugly properties, and there's a lot more ugliness out there with everything since COVID. We all want the magical wand, like to flip this house, take this, and $5,000 later it looks like this, right? Well, that's not the way it is. We all know that. It takes a lot of work. It takes a lot of management, overhead, money to be in the fix and flip business or the buying to rental business. It takes a lot of time. And I've done that, been renters, or been landlords here in Austin, Texas, built and rehab plenty of houses. I still rehab a few houses here and there, depending on what's going on with my portfolio. But I want you to think bigger than just individual properties. I want you to think bigger than just your backyard, because there are so many deals out there across the country. And in the note business, your market isn't just your backyard. Your market is the country. It's all across the United States in areas. And that's just one snapshot of a part of my portfolio across the country. This is another snapshot of a portfolio that I bought 2 years ago. Only one big thing, and none of it was my own money. We use other people's money to take these down. So if you're sitting there struggling because A, you don't have capital, B, I have a hard time finding deals in my backyard, you got to think bigger. And there's never been a better time than right now, what's going on in the market right now. I mean, it was an opportunity back in 2008 to 2015. It's now reared its head again in 2021. And I'm going to ask you, are you ready for it? I mean, there's a lot of opportunity coming down the pipeline, and we're already starting to see stuff. Okay, you have to believe this, everybody. You're already in the note business, whether you believe it or not. If you've got an IOU, you've got a truck payment, a car payment, student loan debt, credit card, mortgage, first, second, or third. Oh, Steve, $50 for his membership or whatever. You're in the note business. You're just on the wrong side of the payment stream. And I don't care if Biden says, I'm going to forgive student loan debt. People will find a way to charge up their credit cards in other ways. Okay. But we're all in the note game. You just want to be on the right side, which is receiving payments versus paying payments out. There are still over 4 million homes underwater today. That number is probably creeping closer to 5 or 6 million. Because that was roughly the number before COVID kicked in. And the number's not only it's gotten worse out there. All right. 90% of the homes that are underwater below $150,000 in value are first-time home buyers in a lot of places across the country. 85% of loan modifications fail from banks. And I say that because 85% of the loan modifications done in 2008, 9, and 10 failed. You're going to see a lot of forbearance agreements that have been putting to work here in the last 12 months. A lot of those are going to fail out there, okay? When we buy debt, when we're buying mortgages, when we're buying the loans directly from the banks, we're paying somewhere between 25 and 75% of as-is value, not ARV, all right? We're paying 25 to 75% of as-is value. Now, I know most of you guys, one of the biggest complaints I hear from investors, they can't find deals that make sense. And when deals make sense, that's stuff that's below market value. It doesn't make any sense to go buy a property at full value hoping you just have appreciation. That's gambling with a Russian roulette. All right, you want to find deals that are deals, not overpriced stuff. Okay. Currently, something to keep in mind here: in less than 30 days, there are 11 million plus Americans facing foreclosure and eviction. 11 million Americans across the country are facing foreclosure and eviction. And it's not just the tenants in rentals, it's the borrowers that own those properties, the mom and pop investors, the landlords who haven't had a big resource of reserves to pay their mortgage for the last 12 plus months while their tenants have been living for free. Yes, there's a ton of rental bailout programs, but they're hardly even initiated at all. Most people don't even know about it in the different states available. And yes, I will tell you this right now, banks will sell you notes. You don't need to have $5 million. You don't need to have $2 million. You don't even have to have $1 million to be buying notes. You don't even have to have your own money. You don't have to worry about, I don't care what kind of country western song you've been through, a divorce, laid off from job, you've got a FICO score that looks like a flat line versus something that's above it. I don't care what that is. The banks, all they care about is that you can fund using other people's money, and you're not going to make them look idiotic. And you aren't going to make them look idiotic because the note business is all about using vendors, professionals to do the work for you. Just instead of you hiring a contractor to go out and rehab a property, you're hiring vendors to go out and talk to bars. You're hiring servicing company to go out and get the loans back on track or go the legal route to start the foreclosure process. So yes, banks will sell you notes. If banks will sell this Yahoo, okay, they'll sell me a one-off note. They will sell you the notes. You just got to know what to say and who to talk to. All right, that's the most important part out there. Now, people have always asked me, well, Scott, is it like the Great Recession? Is it 2008 all over again? No, not exactly. We did have some very similar signs. Non-prime is the new subprime. Subprime's been back for a while. And leading up to the start of last year, we saw a lot of lenders out there, even some of the bigger banks, giving really subprime loans, 100% financing. If you had a low FICO, if you were in bankruptcy or out of bankruptcy or out of foreclosure or out of short sale, they would give you loans. We saw this out there. Now, a lot of those loans have gone away, but there are a lot originated. And then you even look at FHA loans out there. Those were at all-time originations because the banks were giving people the down payment, paying $10,000 towards closing costs. That leads to bad loans and big default rates on those type of asset classes because people, when they hit the first hiccup, they don't have a lot of skin in the game. And we know there's record rates in auto, student loan debts, credit cards all across the country out there. Okay. The question I want to ask you is, if you know now if you could go back in time 10 years and knew what you know now, what would you do differently? Well, I know I would buy a lot more stuff because price was a whole lot cheaper back then. What would you do? Would you take the knowledge you have now and apply it to go find deals back then that are much cheaper than what you're paying for now? I think you would. I know I would. What will you do in the next 10 years? What's your focus? It can't be the same thing you've been doing the last 10 years or the same markets because markets change. Competition gets steep. I haven't bought anything in Austin, Texas in over 10 years because it just doesn't make sense in a lot of cases. I'm finding better deals outside of my backyard and outside the Lone Star State. Now, you have a question. What will you do after June 31st? Now, why is June 31st so important? That's the date that all the foreclosure and eviction moratoriums are supposed to end. Now, Texas is already starting foreclosures. You're not seeing it happen owner occupied, but we saw a lot of investor loans start foreclosure in April, actually. States are starting to pick up the docket, the foreclosure docket. Now, a couple states like Vegas, they're stopping things till the end of the year. But other places across the country are already starting to leading to opportunities out there. But honestly, every state is different. And if you're waiting for foreclosures, guess what? You're going to be waiting around for a while. But if you're investing in notes, you could step into the business right now, buy some deals at a discount. And when the foreclosure market rolls around, you'd be cashing checks versus just looking to buy stuff. I mean, being close to the sources where it's all at. So let's talk about some numbers. Currently, based because of COVID, there are 2.5 million mortgages that are at least 30 days late across the country. That's a smaller number because that's not recording all the owner finance stuff and things like that there. Okay? That's just residential, not commercial. 1.8 million borrowers are at least 90 plus days late. We've got a delinquency rate of 4.66% of all loans across the country. And that comes from Black Knight. That was a report just released last month. Now, FHA loans, I spoke about them. These are the highest default rate at roughly 14%. 14.2, 14.3% of all FHA loans are in default. Okay, they're at least 90 days late. All right, a lot of people in those areas haven't gone back to work and may not, who knows, okay? Now, the states that are seeing the most amount of trouble, Mississippi, West Virginia, Alabama, Indiana, New Mexico, they lead the nation with the large default rates. It's also our poorest states across the country. Florida, Texas, and Louisiana also lead in new foreclosures over the last few months. Texas, specifically Houston, Harris County, has been in trouble for a while with all the hurricanes and the flooding that's taken place there over the last really 2 years before COVID kicked in. Florida, God's waiting room, as I like to say, has been impacted. Louisiana has also been heavily impacted as well. Prior to COVID, prior to February of last year, 1 in 9 borrowers were at least 30 days in default. All right. So in a room of 9 of you, 1 of you was at least 30 days in default. That number has not gotten better. Now, if you look at California numbers, 1 in 3 California borrowers were at least 90 days late prior to COVID. People can't afford the houses that they're in out there. All right. It leads to some opportunity if you know how to buy and go from there. But who knows? The communist state of California, I know many of you live in there. It's a tough time out there. It's going to be a while before anything shakes itself out there in California. That doesn't mean there aren't opportunities in other states. So this is a map we pulled up off of, I'll know the website here in a second, I don't remember what it is, but basically it kind of highlights the states that are facing. The very light ones aren't, but you can see that the percentage of those in default are facing foreclosure and eviction. And when he breaks it down to a number by number basis, you see that Texas, oh yeah, this is from the visual capitalist, that's what it was. Texas has over 700,000 people likely to be foreclosed or evicted once the moratorium ends. California is second, 510. New York is just behind, as a close third at 509. Florida is 314. North Carolina is just under 200,000. That number is climbing the longer this goes on. It leads to a lot of opportunities in those areas if you know where to look. And that's one of those things that we specialize in, showing people how to find deals. Now, is it another wave, a tsunami of foreclosures and evictions? It's not going to be as bad as 2008. That's where this cartoon is from. But we're going to see it definitely taking place, and Wall Street is already starting to prepare itself for that, because we're starting to get more phone calls, more emails from bankers and funds asking if we're buying, because they're looking to move some stuff off their books. And we're seeing some deals, pricing on deals we haven't seen in the last 12 months or so. But let's talk about how we find these deals, because finding is the most important thing, not funding. You got to have a deal to raise capital first. That's my biggest thing. Got to have a deal. And the beautiful thing about the banks don't care. They're not going to ask you to proof up where your funds are coming from, or that you've got to have it yourself most of the time. Okay. And finding deal, if you got a good deal, it'll find money out there, ladies and gentlemen. So I've bought debt on a variety of deals out there, whether it's single and multifamily homes, apartments, self-storage facilities, medical office, long-term care, mobile home parks, motels and hotels, even auto debt. I bought a note on a truck back in 2010 for $3,500 and borrowed $1,200. We repoed it after giving an option. Actually, that Ford F-150 there. I drove it around the country for 3.5 years. And when I sold it on a trade-in or traded it in, I got $3,500 trade-in value after driving for 3.5 years. It was awesome. But I've done deals from as little as $7 for a note on a property in Baltimore, all the way up to $7 million for a portfolio. I've done a lot of different things out there, and I'm always excited to share my expertise with you guys in any way I can. So where do you find these deals? Well, you're going to find these deals from the predominant players out there. Yes, banks. And we're talking banks, not the big top 4 or 5, not the Bank of America's, the Chases, the Cities, the Wells Fargo's. Yes, they have loans for sale, but they are only going to sell those loans in big portfolios, 50 million to Goldman Sachs to Wall Street. That still leaves you like 4,000 other banks across the country. And we like to track banks that have at least 5 branches or greater. There's actually about 1,780, 84, 85 banks that have more than 5 branches across the country. And so we track those. So there's roughly over 1,500 banks right there that we will follow up to. We get a report monthly, quarterly, as they follow reports. So we can see who's got bad debt, who's got more defaults this quarter than last quarter. How's that break down to it? So it's a great way to give you a bit of an idea who to reach out to. And we'll share with you how we reach out to them in just a second. But banks are a great place. Hedge funds, lending institutions, servicing companies have loans for sale. Auction websites like auction.com or exchange.loans, and places you can go to look at individual loans. Unfortunately, it's not a loan MLS like there is for traditional real estate, but there are plenty of deals out there if you know where to look. Mortgage bankers, those originating loans, they're keeping their own portfolio. Hard money lenders, residential commercial brokers like that will sometimes see stuff, especially when they're doing commercial loan. Okay, private sellers like me and other students of ours, or other note investors out there, are often selling notes off. We're buying non-performing, getting reperforming, selling off at a higher price once it's performing out there. So there's a lot of places to find deals out there. Not as difficult as you would think. You're just not going to walk in your local bank and say, I want to buy some notes. They're not going to know. You got to know who to talk to. And that's an important thing in knowing who to talk to. And one of the big things that we utilize is LinkedIn. And LinkedIn is a huge resource. If you don't have a LinkedIn account, you're really missing out. You don't need a paid account. Just use a free account. Just make sure you got a complete profile. But there's 4 titles of asset managers at banks that we look for on LinkedIn that we reach out to. First one is we look for special asset managers. We do a search. Go to LinkedIn right now, you'll see 273,000 plus people that have that job title. And we send a connection to them, follow up with an email, or follow up with a phone call. But it's easy. Everybody can reach out via LinkedIn. Okay. Secondary marketing managers. We are in the secondary market and buying these loans direct from banks and lending institutions. The whole secondary market's popped up in the last 13 years. There's over 1 million plus connections of people out there that have that in their job history. Chief credit officers or chief credit risk officers. There's basically 124,000. This would be more on your smaller banks, smaller lending institutions out there that have this. We're not really chasing credit unions. They don't usually have a lot available, but we do check for smaller banks, and we're usually asking for the chief credit risk officer. Okay. Your special asset manager would be your large institutions. Secondary marketing may be your larger hedge funds, lending institutions. Whole loan sales, that could be your big hedge funds as well. If you do look for whole loan sales or whole loan traders, there's 39,000 plus connections on LinkedIn. And that's a great way to find portfolios to look at. We look at a lot of portfolios by targeting whole loan sales, whole loan trading desk, and reaching out to them directly and just following up that way. So pretty easy to find these people if you just know where to look. Okay. You're not going to go to your local bank. You're not going to jump on the MLS. You're not going to call customer service because they're not going to know what the heck you're talking about. Most of the customer service people don't know. There's lacking. So basically, you're either going to jump on LinkedIn or call the main corporate office and go that route. But it's something that we do. We'll still make phone calls at least one day a month, for 3, 4, 5 hours. Still reach out and get a lot of new connections. But that's the biggest thing is finding deals. Is all about building that database. And if you've got a cell phone and internet, you're off and rock and rolling. Okay. We've bought debt from a variety of different things. Capital One, a big bank. Yes, Wells Fargo, we bought commercial debt from them. Union Bank, Bank of the West, PNC. This is just a drop in the bucket from the lending institutions that we're approved to buy with. And it's not difficult. You often will have to sign a non-disclosure. Sometimes you'll have to fill out a little bit more information about your company or your tax ID number, your Patriot Act, but it's not a difficult thing. Rarely do they ask for references. Basically, they're on their assumption. If you're talking to them about buying debts, you know what the heck you're doing. Okay. Now, many banks have junk on their books. Now, junk to them looks a lot different than what we consider junk. Many of us consider junk that lean to that ugly POS property that we saw, the shack. That's not what junk is to the banks. The junk is banks' portfolios that have loans that are serious in default, like this property in Miami Gardens, Florida. When we saw this on a tape, the borrower was 698 days behind, hadn't paid in almost 2 years. Why the bank has started foreclosure beats me, but the value dropped down, so the borrower was upside down. He actually lived in San Francisco, but this property was in South Florida. We ended up buying this loan at below 70% of value, started the foreclosure process. In the year that it took us to foreclosure, the property appreciated up quite a bit, and we really made out like bandits on this deal. This is a hotel, a historic hotel. It's a pretty condo in Coral Gables, Florida, the David Williams Hotel. We picked up 2 notes in there. And Florida took a while to foreclose, and we bought them cheap, roughly less than 20 cents on the dollar, held on to them for a period of time, 18 months, and then sold them after the foreclosure auction, made out like bandits. You'll see one-off deals. Those came from an investment hedge fund. This one in Miami Gardens came from a bank in Florida. This bank, this asset down here, this is South Carolina, just a normal 3-bedroom, 1-bath center block house, was an investment property. An investor out of North Carolina, he bought it as, I am gonna buy a property. Then the market hit him tough. He got laid off as well. And what he thought would be his dream turned into an albatross, a really anchor around his neck, ball and chain. And when we bought the note, we reached out to him. It was a very interesting conversation with him because he didn't believe me that we were saying, listen, if you want to just walk away from this, I'll let you walk away. Wife didn't believe. Wife was railing on him. Oh, that investment property. Yeah, sure, the bank will let you walk away. Well, sure enough, we let him walk. We paid him $1,000 as a shut-up check, which he gave to his wife. I ended up getting a letter from him about a month after we closed. He goes, thank you so much. Our non-performing marriage is now performing again. 30 years, that's what most people think when you're investing in notes, it's going to be 30 years like a mortgage. That's not the case. But sometimes people just need to walk away from property, and we will do that pretty often and becomes pretty popular as well. We've got this property we just perked up just a month ago. This is down in Cutler Bay, Florida. It's a beautiful house. You can see it's a 4-car garage, not a 2-car. Like 6,500 square foot. It's worth $750. Borrower owes over $1 million. It's an investor on this deal. Has not paid in over a year, obviously because of COVID. That's why he owes way more than what the property's worth. Well, we bought the note at just under $450 and looking to make somewhere between $200 and $250, maybe $300,000 on the deal when it goes to foreclosure this month in just a few days, actually. So we're really excited about this deal. Okay. Now, talking about funding, when you get deals in, find deals, whether it's a one-off asset or you'll get a big tape that you can kind of cherry pick. Finding something on there, understanding what you have is the big key. All right. And there's a lot of due diligence that goes in the tapes. Look, I'm a big believer. Hey, look at one asset. If you can find something in your backyard, great. But most of the time, you're going to find stuff in other states out there. So evaluate that asset like you would if it was in your backyard. There's a tool called Google, ladies and gentlemen, that helps you travel this information superhighway all across the country to do due diligence on assets. And you don't actually have to go in and see every asset. All right. There's a lot of times you'll buy deals well below you would ever buy as an REO, and that gives you the flexibility to do some great things. But funding is pretty easy. But for most people, like, oh, this is intimidating. I don't know how to find funders. Well, funders are everywhere. Okay. We use OPM. I do this because banks will not give you a loan on a loan. All right. Now, some banks on commercial notes will help finance that loan or let you take over that loan if you're going to operate the property. You've seen it done numerous times. But most of the time, the banks aren't going to give you a loan on a one-off note. Okay. It's rare to find hard money lenders too that understand the note business. They don't want to be tied up into a performing note for a period of time. Hard money lenders want to be in a deal 6 to 12 months at the max. They make their money by rinse and repeating the deals, making their points and their spread on that. So hard money lenders don't like it. Now you can find some non-performing notes from hard money lenders that can turn out to be pretty good deals as well. But we use OPM, other people's money, or OPI, other people's IRAs accounts. And if you've got an IRA account, guess what? You can use your own funds in your IRA account to go buy notes. All right. You also, what's great about IRAs, whether it's your traditional, a Roth, an ESA, an HSA, or a solo 401k or whatever, even if it's a self-directed IRA LLC, you can use these deals to fund directly from banks. And every IRA company is familiar with the self-directed IRA company out there, like your Equity Trust, your Pensco, your Quests, your Mid-Atlantics, your Directs. They're all familiar with the note business, buying non-performing, okay, or if you're lending money on a note out of it, okay. A great way to, IRA investors are a great way to have them fund your deals. Now, how do we find these investors? Well, it's pretty easy. Obviously, you're all a part of a REIA club. You're probably a part of numerous REIA clubs, whether it's in Vegas or LA or wherever you're at. That's a great way to go. Meet with people there. Go to meetup groups, network with people, talk about what you're doing. Share with the deals that you're working with. People want to see something tangible. That's why we focus on the find side first. But self-directed IRA investors are really easy to find, especially those that have pulled the trigger on a deal of some sort, whether they've bought a property with their funds or they've lent money out of it. It's easy to find. Most places, excluding California, you can go to the county appraisal district or the assessor's website and do a search with any of the self-directed IRA companies. Like if you type in Equity Trust, which is the biggest one, you'll often find 100 plus, 50 to 100 plus, sometimes hundreds of investors who have used their IRA to buy a piece of property. And you know what? You have the address, and oftentimes the mail-in address is different from the IRA company. And if not, you'll often see their names attached to it, then you jump on Google or LinkedIn and track them down. That's what we do. The only little direct mail that we do is actually to IRA investors if we can't find them online. Now that's free, literally minutes to pull hundreds of investors. We do a big job of teaching people how to do this. Now, what does work if you're in a state like California that doesn't allow you to search by name is you can go to the county recorder or the county clerk website of every county and search, same thing, by equity trust, Pensco, Quest, and it'll give you a list of people who have lent money out of their IRA. Once again, their name, their address, and the amount lent. All right. This is a great way to do it. We do a deed search on the county clerk site, and same thing. Look for Quest Trust, Quest IRA, Quest Trust, and look for a deed search for the last 12 months, and it will pull up a lot of people all across the country. And once again, you've got their information. Now it's just a phone call. Hey, I see you're an investor. You're looking for more deals. I've got some stuff I'd love to run by and talk. It's a very simple conversation. We show you how to do that. Raising capital is really easy. It's so much easier than you expect. There are some things you don't want to do, and we cover that later on, but that's a different night and a different webinar. But let's talk about the exit strategies, the flip side. If you buy something, get it funded, great. What the heck do I do with it now? Well, there's a variety of options. There are actually 10 different exit strategies. We'll run through these really quick. If you find a deal, you don't even have to put it in a contract, ladies and gentlemen. If you're a wholesaler out there and you find a note that makes sense, get it a price, you can actually wholesale the note to another investor like myself. All right, I had an investor reach out to me today. Hey, I got a deal on a property in Las Vegas. Would you like to buy it? I'm like, okay, what's the numbers? He goes, I'm got under contract at roughly 57%. I love to flip it to you for 3 points. I'm like, buy it at 60. Okay, looks like it's a pretty good deal. Let's dive into it. So wholesaling the note, done all the time. We wholesale quite a bit, and when we buy large portfolios, not hard to do at all. Okay, very simple process, just like you're wholesaling a piece of property traditionally. Okay, second strategy is always the first strategy when you're buying notes. If you're actually going to buy the note, that's reinstate the loan. Hey, what are you doing? What happened? Tell me your country western song. Can you start paying your existing payment on time? That's the biggest goal right there. Could you pay a little bit extra? All right. And we'll talk about the second half of that strategy. But the first strategy, always get them back on track, start getting that cash flow rolling in. Okay. Second strategy is if they can't start paying their existing payment, modify the loan in some sort. Do a trial payment plan for 6 to 12 months before forgiving anything. But hey, do you need to start off at 2%, 3%, or do we need to start off at $400 a month versus $500? Whole variety of things you can do in modifying the loan. Don't give the borrower something that they can't go get themselves. Like I wouldn't say, hey, their interest rate's at 5, give them 2. No. All right. Unless they can go get qualified and refinance you out, that's an extra strategy. But if you're modifying the loan, keep the terms of what the market should be at if they couldn't qualify. If they couldn't, that means not giving somebody 2% when they've got a 500 FICO. Okay. Now, if you can't modify the loan, you can always have them see, hey, do you have a borrower? Somebody can come in, a friend, a family member, somebody down the street that wants to take over the loan, assume the loan. We do loan assumptions. Can you pay off the loan? Whether it's a full payoff or a partial payoff. All right. We negotiate short pays. In a lot of cases, I just did one for a borrower. We forgave $7,000 off of her loan because that's really where she needed to be at to sell the property. Okay. Short sale. We are the fastest short sale negotiation company in America when it's on our deals. Not 6 months, not 9 months. Anybody done some short sales in there? Yeah, I'm sure you have. But short sales are a great way. We do a lot of short sales. We'll buy notes. Actually, I was looking at a note down in Fort Walton Beach just a few minutes ago. That was listed for short sale. Borrow owes $450. Sale's gonna be at about $400. We'll probably forgive somewhere around $40,000 on the deal, but we bought the note well below. That's still gonna be a six-figure payday for us on the short sale side. Okay, and we have the right. We can 1099 the bar for the difference if we want to. Sometimes we do, sometimes we don't. It just depends. Okay, the short sales is the way we see it happening. You're gonna see a lot of short sales hitting the market here in other parts of the country. Sometimes it just doesn't make sense. Let's just do a deed in lieu, cash for keys. Ask the borrower just to sign the property over and walk away. And this happens quite a bit. We do that pretty often with people. Hey, you can't pay, you can't stay on track with your mortgage payments. Let's just have you walk. We'll give you some money, cash for keys. If you've got a second mortgage, we'll do a consent to judgment and then foreclose out the second. But we'll let you walk scot-free a lot of times. Eighth is once the borrower does get back on track, though, if they can reinstate the loan in some sort of fashion, after a period of time, we'll turn around and sell that note off as a reperformer to IRA investors, back to Wall Street, to different hedge funds, other note investors out there looking for performance paper. Plenty of people out there looking for it at a good return. So reselling the performer. 9, if they can't play ball with us, foreclose. Obviously, go to the legal system. Judicial is a longer foreclosure process, costs more to foreclose in judicial states. Non-judicial, a lot of people like those states because it's fast foreclosure, but it's also a bit more pricier for those loans because it is a faster foreclosure process. And that's one thing that's going to dictate what happens in the country. Some states like Texas, Georgia, you'll see faster foreclosures in those markets compared to California, or compared to Florida or South Carolina that are judicial foreclosures. New York, New Jersey could take 2 to 3 years there, so don't buy there, okay? And number 10, let's say you buy in a note, you can't get the strategy to go. You bought it in Vegas, and unfortunately, it's a year long to foreclose there. You can always resell the note to another investor locally or somebody else who wants to take on that deal, who's willing to take on the deal to handle the foreclosure. We see this happening. It's a strategy for you. We just picked up a couple of notes that a fund was closing out. They needed to close before the end of the month, so they sold us the notes, last 2 notes on their portfolio at a big discount. They're added value to it because we know exactly which way we go. We know when we were buying these notes, it wasn't going to be a modification or reinstatement. We know we got to foreclose on the 2, and the pricing made sense. So lots of different ways to make money. It's kind of a choose your own adventure aspect when it comes to buying distressed debt. But the idea here is always to kind of work first with the borrower, rehab the borrower. Wholesaling is a great way to make some quick cash without having a lot of investment, but you're really not an investor when you're wholesaling. You're constantly looking for the next deal. If you're wholesaling or a successful wholesaler, you might as well just change your market a little bit, and often you can raise capital from your repeat buyers to fund your deals, and you might as well make more money that way instead of sit on the table. Okay. A lot of people ask me, hey, Scott, what about occupied? Or can I buy vacant assets and turn them into rentals? Yeah, you can do that in different parts of the country, but here's the thing. Vacant assets have more issues. There are more options, actually more exit strategies if you're buying occupied assets, because you're going to get roughly half of your borrowers to do some sort of modification or reinstatement. And if you're just buying vacant assets, you lose half of the strategies. You always want to try to rehab the borrower. Keep that in mind. The banks are in the business of notes, not in the fix and flips. They're not in the rehab business. No borrower calls the bank when little Timmy flushes his rubber ducky down the toilet. Keep that in mind. If you're tired of toilets, tenants, and trash outs, you don't want to build another business or another job for you. Okay. There are basically 3 payment streams that we see in the performing space. This is what's great about building a note business. It's building cash flows, building streams of income so that you can do whatever the hell you want. You ain't got to show up to meet the floor guy or show up to meet the general contractor, deal with tenants who are not paying or getting evicted. I hate that. Let the professionals handle it. For the performing side, you always get monthly payments, obviously going back reperforming, right? Monthly payments. Always ask for a little skin in the game. Hey, you haven't paid in 6 months, you haven't paid in 12 months. Can you bring a couple months to the table for us to do this? Okay. Can you bring some money to the table so you've got some skin in the game on this? Because if you don't get any skin in the game, that bar is going to end up defaulting later on down the road anyway. And then, of course, at the end, if you get it reperforming, you've got a big payday. You buy it at 60 cents on the dollar these days. You could sell a reperforming note at 85, 90 cents along the way after 12 months, collecting payments, collecting some of the upside and selling it for a nice margin without ever having to fix it or flip it. You're just flipping the note. No legal, just a little bit of servicing costs to log you along the way. And that's a beautiful day. That's actually the highest return on investment is the strategy of rehabbing the bar, not fixing flipping, not taking the property back, but the biggest ROI is always going to be in that buying and holding and or selling the note off in the back end. Okay. Now, vacant properties, you got basically 2 strategies. You can either A, foreclose, or if you can track down the borrower, they're still around, a deed in lieu a lot of times. Okay. So it's roughly 50-50 in vacant. But with vacant, you're going to often need more work, rehab. Air conditioner is probably going off on vacation on a walkabout. The copper goblins have showed up. If you're in a cold area, you don't want to end up having an interior water feature in the basement or ice sculpture in the middle of January in Chicago. We've seen that done. Occupied is great because somebody's keeping the power on, somebody's keeping the heat on, and somebody's living it and taking care of the property. That's why we like occupied assets plus the numerous exit strategy. If it's vacant, I know it's going to either need to replace the plumbing, electrical, the roof, or even the foundation. Somebody's not living into it, or track it down to the studs if somebody's demolished it. So I don't like rehabs. I don't like to do rehabs in Texas or Florida for the most part because I know those markets. I know people there that I trust. You don't want to be doing a rehab 2,000 miles across the country. Focus on the occupied assets, and then if it doesn't work out with a borrower, foreclose, deed in lieu, and sell it as an REO. Sell to somebody there locally, leave a little bit of meat on the bone for somebody to make money on. Okay, it does take longer to foreclose on a vacant asset, because one of the biggest mistakes I made when I was first note investor, I don't want you to make this, the first 2 years, I was buying notes and foreclosing on everything. No loan mods, no. And I should have modified a lot. I left a lot of money on the table, because if I start the foreclosure process, now I'm paying attorney fees, I've got to pay servicing costs, I've got to pay taxes, I've got to, then I got to rehab the property to take it back or to sell it. I mean, if I just modified them, I could have cash flow in the first 30, 60 days, sitting there bringing money in more than I would on a rental. And then after 12 months, I can sell it off and get my basically big chunk of the equity off the thing. So it makes much more sense for occupied assets. Trust me, ladies and gentlemen, it is much easier on that. Okay. And like I said, good deals find money. I'll give you a little bit of example. This was an asset down in South Florida, Fort Lauderdale, valued at $100,000. Okay. 2-bedroom, 2-bath, 1,050 square feet. I know that might be $500,000 in California, but in Fort Lauderdale was 100,000. It was actually vacant, but the HOA, the condo association that we were able to talk to, said it was in good condition. The borrower lived in California, actually. Okay, not on the water, but near the water. It would rent for $1,200 per month. Borrower owed about $165,000 in back payments and everything else. Okay, hadn't paid in 2 years. A big chunk of that payoff was 2 years of default. It'd take about another 12 months to foreclose. Now, what would you pay for this? Okay. And I'm sure people are like, oh, it's worth 100. I'd pay 65, 70 grand for it. And you'd be happy that way, right? Especially Fort Lauderdale's a hot market. It'd probably be worth 160 grand in 12 months. But why wait that long? We were able to buy this note direct from the bank for $33,000. And I sold it 30 days later to another investor for $66,000. Now, for those of you that said I would pay 60, 65, I would love to have one for all of you on this. I made my 33 grand roughly on the deal in a short period of time. Great, good stuff. The investor that bought it, he was actually work out a deed in lieu with the borrower after about 6 months, actually a consent to judgment, because he went ahead and finished the foreclosure to wipe out the HOA fees. But he still came out smelling like roses as well. So it was a win-win-win. The borrower was happy because he was able to get rid of a property he owed over $165,000 on, and he wasn't living in, wasn't able to travel anymore. And so he was very happy because basically he had a lot of the debt basically forgiven to walk away. Okay. He made money holding out too. Now here's another case study for you. My friend Jamie and Lenny Harrington. They're out of previously Taylorsville, North Carolina, but now live in Hickory. She's been a mortgage broker and a CPA for years. Lenny used to work at North Carolina Furniture Direct. Has been an investor pretty much the last 12 plus years. And they're just absolutely great people. First note they bought, we were looking at a tape with 75 assets that we've gotten. The tape is a spreadsheet or Excel spreadsheet from a hedge fund. And there was a Charlotte condo on there in their backyard. Actually, it's about 35 minutes from where they were living, 35 to an hour if I remember correctly. But anyway, it wasn't a bad looking little condo. Not in the greatest part of town, but by far not the worst. And we figured that there was a value of roughly about 50. The borrower owed 37.5, hadn't paid in a couple of years. And I told her she should offer like 4 or 5 on this deal just because it was, they hadn't paid in a couple of years. She offered basically 50 cents a dollar, 17 bucks, because she really wanted the condo. She used her Roth IRA to fund the deal. Well, the bank would have taken 4, we found out. But anyway, she still made out like a bandit because she bought it at 50 cents a dollar, and it turned out roughly more like 33 cents a dollar because it was worth over 50. Because she sent out a door knocker, and the homeowner was there. Opened the door, rehab, done a really good job of the property. He's a long haul truck driver, been out of work for a while. I was like, listen, I would really like to stay. Can I start making my existing payment to you monthly and pay you my 5 grand sign on bonus with this company to reinstate the loan? And Jamie said, yes, that would be great. 5 grand plus payments within the first 60 days. She was feeling pretty good. Well, 6 months later, after modifying the loan and keeping the bar running, he showed up at her house, actually at her office in Hickory, not too far. So listen, can you buy this can I just give this property to you? I'm moving to California. Can I just sign the property over to you and walk away? And she's like, sure, you can, no problem. So she did that after about a year. And then she held onto it as a rental, turned it into a rental in her IRA, renting for $800 a month. And later on sold the asset for $45K 4 years later. So she made out pretty good when you look at the payment stream plus the rental stream on that stuff. and then selling it later on at 45K, more than twice of what she paid for the deal, all tax-free in a Roth IRA. So I love talking with Jamie and Lanny, and they do just an amazing job. We've helped them close on probably about another dozen deals. About one note, he still likes rehabbing. He does some stuff there in the Appalachian Mountains and does some great stuff out there. So, but that's a great deal there for you. Deed and lieu, sometimes the banks don't even know what the heck they have. This is a deal in San Antonio, Texas, a deal that I bought. Borrowed $130,000. Had gotten divorced. Wife had moved out. He had moved in with his mom because he tore his ACL. Had made payments for 12 months. Was really surprised that the bank was willing to let this go for $53,000. House was worth about $125,000. It only needed really a fresh coat of paint and carpet in one bedroom because the dog had torn up the carpet there. It's less than $5K work. We talked to people in the local RIA group in San Antonio. Investor came in, funded the $58K. We reached out to the borrower, actually signed a deed in lieu with a notary on the hood of his truck outside his work there. He's glad to be done with it. Let him walk, scot-free from what he owed. Turned around and listed the property for sale, sold it for 90 days later for $125K. A pretty good $60,000 profit. I wish they were all that fast, but the investor is pretty happy to split that profit with me in his IRA. And I was happy because it's a nice chunk of change for 90 days. The ROI on that is high. And the whole idea is that you do these, you get in a habit of doing, you buy one, you buy two, you buy three, boom, then you start buying more of these things as you start marketing out to them. This was actually one of 3 notes that we bought from a bank out there. Actually, Jamie and Lenny and bought another one, and then we've wholesaled another performing note from that same bank. Okay. This is a deal in Fort Myers, Florida. We thought we'd have to foreclose on it. It was worth about $90,000-$95,000. We bought it for $44,000. When we got the loan collateral file 2 weeks later from the bank, there was actually a signed deed in lieu on the front that the bank didn't know about. So we didn't have to foreclose. We just turned around, filed the deed, and then went and sold it on the MLS for over $90,000 later. This one in Cincinnati, Ohio, borrower was walking away from the property. She's like, I don't want this house anymore. It was worth about $60,000. She owed 17 on it. No, sorry, she owed more than 60 on it. We bought it for 17 and roughly netted, 51 on it. So we basically tripled our money in 7 months on this deal. Another investor came in, did the heavy rehab on it and sold it higher than that. But hey, I didn't want to do a rehab in Cincinnati, Ohio. I'd rather make my 30 some odd grand on this deal in less than 6 months ago from there. Sometimes you'll have borrowers pay in full. This just happened. This is in Alabama, Birmingham, Alabama. Borrower calls us up. Hey, we're going to pay off the loan. We're cashing out our 401k. I just want to pay this thing off. I'm like, okay, great. Thank you very much. It's Christmas in May, ladies and gentlemen. Sometimes you'll have that happen. Not every borrower is going to be around for 30 years. Rarely do we see that. Usually it's 24 to maybe 60 months if you're going to hold performing notes for a while. But a lot of times when you're buying non-performing, get reperforming, borrowers either end up selling or moving in that 7-year period. And it's not a 30-year holding. You can hold it for 30 years if the borrower wants to. For the most part, you're getting paid off. And then what do I do with that money? We go and double down or triple down. One deal turns into 2 or 3 deals that we use from the profits. And then we exponentially grow our note business from there. Okay. And if you're doing things right and you're making contacts to banks on LinkedIn, and you're closing on deals, the bank will call you. And the bank did so on this deal here in apartment in West Palm Beach, Florida. They called me up. It was 6 units worth $240 at the time. Borrowed $490,000 on this deal. Wasn't in the greatest of shape. It took 90 days of negotiating back and forth because the bank actually wanted more. We ended up settling back at $175, but 8 months of work into it. Took it over in receivership, started actually operating, started getting cash flow. We put new tenants in there, started getting cash flow from the tenants, and then sold it at the auction a few months later for $310,000. So it was a pretty nice $135,000 profit in 8 months, plus 8 months of rent on these things. And that was a pretty good win-win for us as well. But the bank called me. It's like, listen, hey, I know you closed it with somebody, my friend referred me to you. Are you interested in this? And I said, no. I was like, no, I'm not going to pay full value for this. No. Got to the end of the quarter. He was much more willing to move assets at a discount. I said, my price is $175. I'm not going to budge from there. And he said, okay, can you close in 2 weeks? I was like, yes, I can. And go from there. So it's beautiful. So we talk about creating win-wins for everybody. We create a win for the property owner or the borrower on the property. I mean, you've heard some of these stories of offering them deed in lieu, of letting them walk, not coming after them for deficiency judgment if they're willing to work with us. we're not reporting to credit unless they start paying again. Then we help them boost their credit versus decreasing their credit. There's no foreclosure in their credit if they'll work with us. A foreclosure will scar somebody's credit for 7 years versus late pays of just being 24 months. Hey, we'll do cash for keys. They're divorced, whatever. Their wife is gone, husband is gone, something. We'll work with them to be done with the property and move on. No promissory notes for what they owed us. We really want to work with them. And I don't know about you guys, America really feels like it's got its head in the sand out there with what's going on. They're not paying attention. They're not checking their mail. It's not going to be as bad as it was 13 years ago, but it's still going to be bad. There's going to be a lot of people, as I showed you, that are struggling, and you have an opportunity to come in and really do some good and make some money doing good, ladies and gentlemen. There's a lot of rental programs, there's a lot of bailout programs that most banks, most lenders don't know about, borrowers don't know about. And you can actually buy notes at a discount and then work with them in these programs to make sure you get paid. It's a beautiful thing. Okay. How do we create a win-win for the banks? Well, the banks, guys, I'll tell you what, they've got this bad debt that's killing their books. And then many of them had a pretend extend mentality, especially commercial notes. This time around, 70% of all the loans in default on the commercial side are financed by banks, not Wall Street this time. And it's a lot of that small balance, sub $5 million value. Wall Street likes $5 million and greater. There's a whole ton of this small balance stuff that the banks are looking to get rid of. And you being a note investor, you can settle in a fraction of time. A lot more flexibility next to strategy. Banks do hate REOs. If you know what's going on with that asset, maybe you need to get creative with it. Maybe you need to turn a hotel into an apartment complex, okay? Or maybe you need to turn an executive space to self-storage for a while, or a big box into warehouse. There's a lot of great things that you can do that the banks can't do because they just are too big. But you, being a note investor, you can be creative on it. Unfortunately, this pretending mentality that banks have had for a while has really not been smart. And we all know that banks don't really have their head in the right spot, okay? They're not paying attention. They're looking at the bottom line, and a lot of the same mistakes that we've seen happen are because they didn't learn from their last lessons, okay? How do we create win-wins for us, the investor, ladies and gentlemen? That's what you're here for. That's what we asked this in the front end. Why? Why are you here? You're here to change your path, to do something different, or to add, I hate to say this, add a tool to your tool belt. You should get rid of your tool belt, make this the one tool you're doing, because this is one thing that we're all in. And you have got, once in every 20 years, roughly, we see a downturn, and we've all seen that the market can't keep going up. It's got to turn down at some point, and we're on that precipice of it. How about you guys? But when I first started as a real estate investor, I felt like I was on, just running in circles, doing all this work and not getting any further down the road, just on a treadmill, okay? Not getting any further at all. But the beautiful thing is when I started to focus on note investing, so I found there was very little competition. There's a lot of resources, but very little competition compared to your fix and flippers, your wholesalers, your landlords out there. We're a smaller group out there, okay? We see awesome deals. We don't do skinny deals. Too many investors are getting in because they're weekend warriors. They're overpaying because they want to just pull the trigger on a deal. Don't do that, okay? We see awesome deals on both residential, commercial, marketing the same way, okay? Very little overhead. You're not sending out postcards, thousands of postcards every month. We're not door knocking, having a chance to get shot at. I have been shot at a couple of times. I'll say that. You're able to do this if you got a computer, your cell phone, and you're coachable, okay? But like I said, you can close residential, commercial deals, doing a lot of the same marketing. You can do this all across the country and really make some nice returns, nice money. And you can do this with none of your own money. You can use other people's money, pay them a good return, and put a good return in your pocket as well. Or as Ron Grandlinks says, the hip national bank, okay? Now, don't go property crazy. We see this happen all the time. If you're brand new to real estate investing, hey, awesome. You start off like a puppy. I'm so excited. Yay, you're telling everybody I'm a real estate investor. I went to a workshop. I watched this webinar on TV, whatever, okay? But what happens is after like 6 months, your property shining. You're wanting to kill somebody because you spent this money in classes and education and marketing and nothing seems to be working. Well, we've seen that. I've been there, worked with thousands of investors who have gone through this. They're all excited, but they don't know where to go. And then after a while, they get really jaded because they've spent a lot of money and not have been successful. And that's why we do a good job of really taking your craziness, because we're all crazy. And if you're coachable, we'll show you how to find the deals that are upside down. We'll show you how to find the realtors to help you pull values. We'll show you the company out there to evaluate the collateral, the loan docs to tell you what you have and what you don't have. We'll talk with a servicing company that can help hold your hand and will do the borrower outreach for you that you don't need to be doing. Okay. We'll share with you the attorneys to help you foreclose or to negotiate the modifications or create the agreements or help you foreclose where it might be. We'll help you find the IRA investors out there for you in your community or in the communities you're investing in. We'll even show you how the insurance in case of an act of God. This is such a beautiful business that you don't have to understand paint and carpet and rehab and go out and do all this stuff yourself. You could do this remote. I've done this business from here in Austin, Texas, from Orlando, Florida, Denver, the Bay of Spain, from Paris. You can do this business with internet. I've done a lot of negotiations with my vendors on my cell phone after buying stuff and negotiating which way to go. This is a beautiful business that, ladies and gentlemen, is really where it's at. Everybody wants to be the lender. Well, the lender always makes it. The bank always wins, ladies and gentlemen. And after a while, you don't have to be so crazy wanting to kill somebody. You could be sitting there, why didn't I do this sooner? It was a no-brainer. Note investing is a no-brainer. If you really will sit down, think through it, look through it, you'll understand it. It does make sense to always be the bank because the bank does always win. So I started teaching back in 2010 because I coming across all sorts of deals. And I'm still to this day coming across more deals than I could take down myself. And I'm so proud of the students. I mean, literally started back in a room, actually rented a house for over 10 days in Florida, brought in some of my initial students and my friends together. We bought some notes and it's really blossomed from there. I've helped so many investors buy notes for their own portfolio, for their investors, and just make life-changing income and life-changing decisions, not only for themselves, but for their family, their friends, and their, their future out there. Whether it's in San Antonio, on the water, in Hawaii there, or we're back in Florida again, or in Austin, Texas, whatever it might be, ladies and gentlemen, I'm so proud of the fact that my students are pulling the trigger and buying lots of deals. When I look at my students, they've closed thousands of deals. And there's just one photo here from one of my masterminds. This group has just closed over 2,000 notes individually themselves. Not me, 2,000 themselves. And that's a beautiful thing when it talks about the proof being in the pudding, is they're going out, they're taking and learning from me, taking the strategies that we've been taught and passing it on to them to go out and find success, whether it's performing notes or it's non-performing notes, or they're looking to do this part-time or full-time. You can do this. So what's the catch? What's the catch, Scott? Well, the catch is that I know that people don't know what they don't know. Like many of you have heard notes. I've heard that note thing. I watched. I'm an owner financing. Well, it's not what I'm talking about. There's a lot of little niches out there, and you don't know what you don't know. And that's fine. You need somebody to talk to. You need somebody to pick up the phone and talk to when you got a question or you're on the phone with a bank or exchanging emails, stuff like that. You don't know what you don't know, and you need somebody to call. And that's one of the things that we specialize in. As you will hear, we are always here for our students because I know it's an opportunity not only for us, because we may see deals and may buy deals from you, but it's also deals for you. You growing and buying more deals is a win-win. You buy more deals means I'm probably going to buy more deals. It means you're going to help more people. It's going to be more making more money and go do some bigger things out there. But investors struggle with three primary things. One is finding deals, and that comes down to marketing. It's the 21st century. You can't be marketing like you were in 2020 or 2019 or 1990. Unfortunately, many people are still doing that. Okay. We teach you the smart way to find deals direct from banks, not one at a time, but sometimes hundreds to thousands of deals at a time. We'll show you how to market smartly. Yes, it is a 21st century, and Scotty is here to beam you up. And I'm giving her all she's got, Captain, to help you find and market smartly to get deals where you're not wasting money and time and energy doing other stupid things, okay? And the third thing is raising capital. We've raised millions of dollars. I've got some of the best attorneys and PPM and fund managers out there. We've raised millions, if not billions of dollars. And I'm glad to share their knowledge with you guys to make sure you're doing the right thing. But you don't have to raise millions of dollars. I mean, most of our students start off with buying like a single note for 25 grand or 50 grand, buying one or two, starting to figure things out, and they go from there. So raising money is a lot easier than most people. There are trillions of dollars sitting on the sidelines. You just got to know what to say and how to say it, and we provide all that for you. So you need a game plan, got to have some goals, got to take some actions, got to look at what you're doing and evaluate what's working best for you. And that's one thing I want to ask you. What have you been doing now? Has it been working good for you? Great. If it hasn't been working for you, it's time to do something different. And we're buying notes on a regular basis. I'm not just teaching. I am buying notes on a regular basis. I walk the walk before I talk the talk. All right. And that's why I'm here. Steve asked me to talk about my virtual note buying workshop, and we have a class that we teach every quarter. Our next note buying, we call it note buying for dummies, kind of. Our next virtual note buying workshop is in June 22nd through the 25th. You've got my one-day class included. Noteweekend.com is included. It's $49 normal cost. We're giving that away for free. Our virtual note buying workshop is our nuts and bolts package, not just a Cliff Notes version, but really the whole thing and the kitchen sink for those that are really interested in learning note investing. So what's included? It's a 3-day workshop, June 25th through the 27th. It's a Friday, Saturday, Sunday. Go basically 9 to 5 all 3 days. We'll end a little early on Sunday for you, but it's 3 days of me live. Yes, you'll get the recordings of the previous class. You can start watching and learning that now, but this is 3 days live to be able to ask questions. We'll have our vendors on. It's really a full impact, not boring, me droning on. No, I like to keep it entertaining, so that makes sure that you're awake and learning. But 3 days of live content. It's on Zoom, so you can watch from your smartphone or your computer or your laptop. It is recorded, so if you miss a day because you've got something going on, don't worry about it. You'll get the replays to that. You'll have access to our online network, our private Facebook group with about 1,000 other note investors out there that you can network with, ask questions, comment on. We provide a manual of over 200 pages, includes scripts, forms, samples that we use on a regular basis of what we say, how we say it to the bankers. Like I said, you do have the replays included on this one, but the one previously, so you can start learning now. You don't have to wait till the 25th to start learning. You can start learning now. And normally we sell our full boat package there for $997. We might have a better price for you tonight because it's Steve, but we'll talk to you how to learn how to evaluate deals, breaking down tapes, let you know what you look at. We'll talk to you how to buy notes nationwide in hot markets. Okay. We'll talk about what and what not to say. You'll be able to hear me speaking. You'll see exactly what I say to banks via email, via LinkedIn, and how we get them to say yes to send us some. We'll talk about finding financing for your pool deals. Actually, if you're buying a pool, oftentimes you can find some financing available for that. We'll talk about how to raise private money. We'll talk about protecting your assets. It's important because you are going to be buying debt. You're going to be needing to set up an LLC or two. We'll talk about marketing to attract buyers and sellers for your deals. We'll talk about note investing in your self-directed IRA. We'll talk about breaking down how to determine a deal from a dud, and a ton of other things we'll cover in that 3-day virtual note buying workshop. Okay. A couple of special bonuses that I don't do every time, but I'm throwing this in because Steve, I've known Steve for years and such honor to be speaking here tonight in front of you. Special bonus is usually, we'll throw this in, like you said, the replays are included in the April virtual note buying workshop. We just filmed that a couple months ago. You'll get that. It's normally $99. You'll get a ticket to Note Camp. This is our mid-year online convention. It's usually a $399 ticket. This is a 3.5-day workshop conference. We'll throw that in for the end of July as well. We'll also throw in, if you sign up tonight, or if you sign up before the end of the weekend here, because I know some people watch at different times. If you sign up before the end of the weekend, I will throw in my 4-week note coaching program. That runs from June to July. And what we do with that is 2 weeks prior to my class, we start doing weekly coaching calls. Hey, how do you get started? It really helps you get your momentum flowing. So we do 2 weeks before, 2 weeks after the class. Yes, we'll skip the week of 4th of July. I'm not worried about that. So maybe 5 weeks, maybe 6 weeks, but we'll do 4 weeks of coaching. There'll be homework each week, a little bit easy stuff for you to do, but really help you take your note business a whole different level. And we'll throw that in there. It's usually a $599 value just for that 4-week coaching, because it is hands-on. Those calls will last an hour to 2 hours every Wednesday or Thursday night. It all depends on who signs up for it and what works best for the group. So that's thrown in there for June, July. All that together is over $1,000 of extra bonuses for the virtual workshop. What we'll do, like I said, throwing in these bonuses, 3-day workshop, the convention ticket, 4 weeks of weekly coaching, all that together. You go to steveandscott.club. That's www.steveandscott.club. You can get signed up tonight at the low price. Drum roll, please. Normal pricing is normal, $21.97 for all this stuff, but we're going to drop it down through this week. This price, these bonuses go away Sunday night at midnight for just $6.99. So if you go to steveandscott.club, yes, your spouse, yes, your existing business partner is included with that. So it's not an extra cost to then add your spouse. You get a different link. If you've got a business partner, you've got to share either blood, an LLC, or a bed. Okay, that's what constitutes a business partner. Don't care how you pay it, just pay the $6.99. You guys can divvy it up. The $6.99 price is good. If you go to steveandscott.club tonight, ladies and gentlemen, get signed up here before Sunday at midnight. That price is good. Everybody on here gets my note weekend class is another $49 bonus. That's the third Saturday of June for the day from 9 a.m. to 1, 2 o'clock. That's included, obviously, for all of you. But the bonuses that we're offering here is just good if you take the opportunity to get signed tonight at $6.99. So encourage you to do that. Now, our students are doing amazing things out there, buying a ton of deals. And these numbers on these images I'm going to show you are small numbers compared to what they've done now. Chris and Katie have closed on over 20 deals. Michael Wickles closed on about a dozen, still working full-time. He does this part-time. Hatham and Riaz have closed on over 100 deals, okay? JD and Harvey closed on about a dozen deals. DeWitt has closed on over 70 deals. Peggy Sue's closed on, I think, about a dozen deals too. She's a realtor as well. Wayne has closed on over 300, 400 deals now at this point. Bill Griesmer out of Columbus has closed on over 20 deals. Cody Cox has closed on over 50 deals. Howard Markel, who's from the Dominican Republic, came to the United States a few years ago, started investing in notes, learning it, closed on over 50 deals, and doing an amazing job down in Tampa and buying stuff across the country. Then you look at Dan Depp and his wife. They've done an amazing job, closed on over 100 deals since they took my class and just rocking and rolling and doing some amazing stuff. Guys, you can sit here. Let me pray on this. Look, praying, God answers your prayers. And I'm not saying I'm your answer. What I'm saying is buying notes and becoming a note investor, you don't have to show up. You don't have to do the work. You don't have to do mailing out the postcards or the yellow letters. If you can jump on LinkedIn, you can talk to people via email or phone call or via direct message on LinkedIn. You can do this business, ladies and gentlemen. It's not that hard to do it. You just got to put some time. Whether you're working full-time, you can do this business, 40 hours a week if you're full-time. If you're part-time, because you still have a full-time job, you can do this from your 7 p.m. to 2 a.m., a couple nights a week and on the weekend. And the assets, guys, we're not talking $1 million properties. Yeah, you'll see some stuff. But can you imagine buying 50 properties for $1 million versus one in LA? Think about that, how you leverage assets and money, buy a lot more stuff than just one deal here or there. That's the beauty that I love about the note business, is that my money is leveraged across, or my investor money is leveraged across a lot more assets versus just one. Don't get me wrong, I like bigger assets, but I also like buying portfolios where I've got 60 opportunities to make money versus just one, okay? And these are just some images of assets off of my portfolio that we've bought the last couple of years, that we've worked to get reperforming, or beat and lose from the borrowers to do that. So once again, ladies and gentlemen, get signed up today. Don't dilly-dally. Take the opportunity. Go to steveandscott.club. Get signed up for $6.99 tonight. Get all those bonuses thrown in. We email you the links. We email you the replays. A member, become a part of our private Facebook group. Start the coaching, the one-on-one the coaching with us, the 4 weeks coaching here prior to our next workshop, and really make June the springboard into July to be ready to help a lot of people out there that are facing difficult times. Be willing to make that 11 million people out there facing eviction and foreclosures an opportunity for you. That's a big, big pool to be swimming in, as full of opportunities. And it is really a great way to win, win, win with you, the banks, and the borrowers, ladies and gentlemen. So steveandscott.club. I'd love for you guys to be a part of that. Get signed up. Got a couple questions people emailed into Steve. I want to make sure to answer there. Feel free, if you do have some questions about the class, want to talk to me, you can always go weclosenotes.com. You'll see it's the 99 price there. You can shoot me an email at scott@weclosenotes.com or shoot me a text message. Let me ask, well, I want to start off in LA. Well, we all want to start off in our backyard, but if it's, like I said before, LA, California is a little pricey. We all know that. Even on the non-performing stuff, it's pricey. What can you do with even $500,000 in LA? Well, buy what, one property maybe? Where $500,000, I could buy 80 assets. I could buy 20 assets. It depends on what you see across the country. You get a much bigger bang for your buck in different parts of the country. I don't buy a lot in California. I don't buy a lot in Texas. I buy a lot where it makes sense. And it's all about ROI, return on investment, and return on time. You don't have to worry about, oh my God, I want to be able to touch it. No, you know what you can do? You can hire people to go out and be your eyes, be your ears. I bought assets all across the country I only looked at assets where I'm actually driven by the asset myself, less than probably 3% of the total assets out there. Yeah, if I'm buying a portfolio in Michigan or Ohio or Florida, yeah, I'll fly out there and spend 3 or 4 days driving around looking at them all. It's well worth doing that. But there's a thing called the internet, ladies and gentlemen. There's realtors and vendors that can help you be your eyes and ears and make sure you're buying the right thing and not buying a dud. All right. Somebody asked me, what do we do as far as contacting the IRA investors at the county records? Well, what do? Is we send them a postcard or we'll send them a letter. Hey, saw that you bought this property or funded this deal. Are you looking for more deals? I'm an active real estate investor buying notes. Would love to talk with you. See about when I call banks, a lot of times we'll call off a foreclosure list. And last month I called 3 foreclosures that were IRA investors foreclosing on their private asset. Lo and behold, I get a hold of their attorney. The attorney's like, oh, yes, I've got a couple deals. Call me back in 2 weeks. I've got 4 more deals that we're looking to foreclose on that would be willing to rather sell the note off at a big discount versus going through the process. Cha-ching, cha-ching. So once again, ladies and gentlemen, I'd love for you to be a part of this. Encourage you to ask questions. Tonight, take the time, steveandscott.club, steveandscott.club. Go there, get signed up for $6.99. You, your spouse, you, your best friend, you and your business partner, and let's take you to the top. Let's bring you to the dark side, the sexy side of real estate as a note investor. Instead of you create another job, let's create a true game plan to building wealth, long-term wealth, and profits for you all out there, especially with what's going on right now. So many opportunities if you just know where to look, who to talk to, and you can be 6 to 12 months ahead of everybody else out there looking for REOs, looking for foreclosures. Don't wait around. Take action tonight and be that better prepared to really do a lot of good. Make these next 10 years the most profitable decade in your life by being a note investor. Thank you, Steve. Thank you, Giovanni. Thank you, everybody, for being a part and watching this. I look forward to helping you on your journey, on your path to success, and we'll see you all at the top, everybody.